were even made them even negative numbers that came out last month. So definitely, the jobs market is not good. Market likes it in regards to it's bad enough that there's going to be a rate cut, but not bad enough that there's a recession. That's why the market here is up. That they're expecting a nice rate cut here, but obviously not bad enough for any kind of recession, at least not for the time being. And that's why we are up here at all-time highs. Again, we have to keep that in mind. We are at all-time highs, so we can't get too excited about the trade here. You got to be very careful with these all-time highs. The rally markets don't do well for us. And we talk about that all the time. They're very hard to scalp. So we are here scalping these markets. We're looking to take advantage of ebbs and flows of the market. And that's what we're here to do as we continue to push here. A little range up here for the last 20, 30 minutes after this number. Non-farm payrolls for August is due today, and it's expected to show fairly steady unemployment rate in a low firing environment. On average, economists expect, as the market rallies here, we're looking at the 50 area, 74,000 in August, which again, with regards to those numbers, let's see here. And the market came in there at 22,000, and the unemployment rate ticked up. The average economist expects non-farm payrolls to be 74,000 and slightly above last month, 73, with the jobs rate inching up to 4.3. So that unemployment rate did tick up. Markets are particularly on edge, but they remain confident that the Fed will start cutting rates when it's meeting in mid-September following last month's weak report. And Jeremy Powell's dovish shift at Jackson Hole. Central Bank will continue to keep a close eye on unemployment rate in particular, as President's immigration policies limit the labor supply, as some economists said in an interview. Healthcare payroll numbers among the largest contributors to overall employment will be another indicator worth watching. The healthcare payroll numbers were lower than expected. If we start to see a slowdown in healthcare, that really raises some red flags about sustainability of our jobs growth streak that we're on when the rest of the economy is so sluggish. Those healthcare numbers were not as strong as was expected if you break down the numbers. The big calendar revisions from previous months, large revisions in earlier payroll figures could reshape the picture and spell trouble for the U.S. Central Bank's soft landing efforts. The labor market already showing slowing inflation rate risks tilted higher in the face of tariffs uncertainty. There is less margin for error. So both of these things, all of these things put together, lead to a very good chance of a let's see here, the data guarantees that a 25 basis point level for interest rate cut in 12 days time. That's when the Fed is going to be meeting. And the interest rate cut in the 12-day span. The week report also reinforces the view that the Fed should have cut rates sooner, particularly last July. It may even prompt some discussion about the possibility of a more aggressive 50 basis points cut in the upcoming meeting. So, those are those numbers. And like I said, the market likes it because it seems like it is bad enough to cut rates, but not bad enough for any kind of recession worries. We'll get to the recession part of it, then the market, I think, will kind of react. They're in a negative way. And the healthcare, and like I said, the healthcare jobs number within the overall number was sluggish and could create a little bit of a issue. And there's no other numbers coming out this morning. All right. All right. So we're just range bound here. Get support down at the 28. See your blue band coming in there around 28. Again, bond market very strong. Yields there probably definitely, yeah, definitely in the 410 area. I mean, definitely looking at bond market suggesting, I should say, that there should be a very decent revenue. You're talking 4.1 in the bonds and 30 and 10 year. And they were pushing 5% not too long ago here. So definitely change of attitude in the bond market for sure here over the last week or so. All right. Again, we're range bound here. So again, make sure we have, keep your stops in place. We're kind of flagging here a little bit, but we rallied already. So we'll see where it wants to go. Let's support down at 28. Make sure you keep your stops in place no matter what. If anybody has any questions, feel free to ask in the chat. All right, we're just slowly down ticking here. A little resistance, still at 50. They got up to, what is that, about 41 there. Can we repeat the levels there from Michael? Thank you. Again, we're range bound here. Again, just kind of range here a little bit. All right, just mired in this range, and again, sometimes that's what happens with unemployment. They open up and they get range bound very widely. All right, again, top of this range. If you're a range bound player, maybe taking advantage of this, but otherwise look for the 50 area. And again, if you're a range bound player, it's where you're at. Upside resistance is at the 50 area. That's our next level there. Again, remember that these are all-time highs here, so tread lightly. Anybody has any questions, feel free to ask in the chat. Again, range bound, top of the range, you're a range bound trader. Doing okay. But just make sure you keep your stops in place. All right, so definitely range bound here. You're going to play range, keep your stop in place. Outside support down at the 28. See our blue band coming in there around 29:30. And obviously, always keep your stops in place. There are no other numbers coming out this morning. Got down here to 30 and change. And coming down here to these interim lows again, maybe. Again, we have support here at 28. You can see the blue bands coming in at 30. So kind of see if you want to scaling around there or not. All that's up to you. Everybody has different risk tolerances here. All right, back in the top of the range. Would have been nice for us to get filled down there, or at least get to 30. At least get down to 30 and change. And you can see here, popped it back up. All right, coming to the top end of this range, getting back off. Kind of a broken record here, but just again, if you're a range player, you're doing good, especially against these interim highs here. And again, top of the range. Again, it's unemployment kind of trade, kind of going nowhere fast. Well, a little volatility here. Quickly now rotating down here to the 30 area. Got down to 30 and a quarter. Your blue band's coming to 31. We have support here at 28. All right, coming down here to the support level here at 28. All right, getting filled there. Got a nice quick 2-point rotation there off of that. This little scalping opportunity there. We did not get filled on 27 though, but it got filled on 28. Gonna give us a little bit of a continuation push here, maybe, but just take your profits there. And see if you want to try to stay long against this level. Just have a trailing stop here. Bonds on their all-time highs. Again, bond market very, very bullish here. And nice rotation against our 28. There's no heat whatsoever there. And at the 29 as well. Trying to get a little push, a better push. All right, nice little trade there if you did jump in. Next support level on the downside we're looking at is down at the 16 area. Again, if anybody has any questions, feel free to ask in the chat. You see the levels there in the chat for you. We're scalping mini S&Ps. We're looking to take advantage of ebbs and flows of the market. Support level there at 28 level and give us a nice rotation there to give us a nice scalping opportunity. It like 3 or 4 points out of these levels, and definitely got that on that rotation here. Coming back down here now, we got our next support level down here at 16. And 22 here is the green band coming in there. 16, almost 17, there's the blue band in our hourly. So that kind of correlates with the 16 that we have. All right, it's a nice little opportunity here if you did jump in against our first support level. Had to wait a while for it to happen, but it occurred. If you traded the top end of that range, you did all right there as well. But again, everybody here trades differently. I can only suggest different ideas. It's up to you if you want to take them or not. Anybody has any questions, feel free to ask in the chat. We don't mind questions. Next four level down at the 16 area. All right, bouncing off of that. There's support there, and coming back up here, we got down to 25. We're looking at the 16 area. No, it hasn't. It has not. It's crazy, but it has not. $1 trillion is still $1 trillion and still beyond anybody's comprehension. Just the numbers are just bigger. Crazy, but it's what it is. It's a ridiculous amount of money. Hey, Powerball up to 1.7 billion. It's not bad if you get lucky. Who needs a pay package? You can get lucky and get $1.7 billion Powerball. Probably have better odds becoming CEO of Tesla and then getting that $1 trillion package and winning the Powerball. I will continue to downtick here. We're at support level. We're down here at the 16 area. Again, a little volatility here to the downside, and again, downside market gives us opportunity versus these rally markets. All right, we continue to slowly downtick here. We're looking at the 16 areas, our next support level. All right. Did not get down to 17 there. Now we got down to 17 and a half there. Hop back up. All right, coming back down here to the zone. Be careful there at 17. All right, well, we bounced back up here. Again, we had 16. We got down to 17 and change. Obviously, we're not going to be perfect, so be careful there if we go retest. Missed it by just that much. All right, again, a little volatility here, so be a little bit careful. Again, be careful here. 17 definitely went back down there and retested the spike low. And we shall see where he wants to go. Yes, we have 16, but because we got down here to 17 and change here, be careful. Maybe take the lower end of that range. If you're more less risk averse, you're waiting for the next downside level. All right, coming down here to the 16 area now. If you are taking the area there, get a nice little quick pop back up. All right, if you got in there at the 15 area, you got a nice little rotation here off of that. You got in at 16, you got a nice rotation as well. So nice little area there to help us. If you did jump in, get it okay. Next support level on the downside we're looking at is down at the 03 area. Yeah, and then we're looking down at the 03 next. Getting some nice rotation here in the market, giving us a little opportunity there to scalp. All right, continue down to 10 and 1075 is the settlement price. For those of you who want to trade the settlement price. All right, some nice little trades there against our levels there. If you did jump in, they had to be a little bit patient there for them, but they did it pay off. Had to wait for them a little bit. And if anybody has any questions, feel free to ask in the chat. You can see the levels there in the chat for you. You can use those as a guide today and see where it wants to go. Again, we're not trying to pick direction here. We're not trying to hit home runs. If we get into a nice area there and you want to try to stay long or short, that's a totally different story. And just have a trailing stop against it. All right, coming down here to the settlement price for those of you who are very, very aggressive. And otherwise, you're looking at the 03 on the downside. Now continue the downtick here, looking at the 03 area. All right, continue the downtick, looking at the 03 area. All right, quickly coming down here now. All right, coming down here to the 03. What wants to do down here, keep your stops in place. All right, there's a couple points here. And then you got Bill there at 03 with no problem. right, so next support level we're looking at the downside is the 64.91 area. Okay. Hey, good way. Good Friday so far. Bouncing off of our levels very nicely here, giving us a chance. Nothing like making a little bit of money on a Friday. Always makes the weekend feel good. And again, it's just a matter of being patient, taking a couple points here, just understanding even though we're down ticking, we are making money on the downside here. I mean, on the long side, believe it or not, but that's what we need. We need the volatility to give us those opportunities. Again, market reacting to the unemployment number, which wasn't good. Probably looking towards a cut in interest rates. Probably guarantees 25, and they'll be talking about 50. And then you'll be talking about, this is initially market reacted to it in a positive way, saying the number was bad, but doesn't sound like a recession. If you get people to start saying that, if this continues, there might be a recession, then you got yourself a bigger problem here for the market. But we are trading off of all-time highs there at 65.4 or 65.41, 2 area that it came off of. So it's not like, also you can say that people are taking some profits as well. All right, we'll continue to downtick here. We're looking at the 91 area next. Now we got down to 94 there. And if anybody has any questions, feel free to ask in the chat. All right. Going quickly back down here to these interim lows. We're looking at the 91 area next. Keep your stops in place no matter what. Again, every time we get rotation to the downside, we have definitely more opportunities than we do when these markets rally like we did earlier this morning. They just definitely give us our opportunities to trade. Again, what traders do like markets that go down. Rally markets are just tough to trade. All right, coming down here to the 91 area. Okay, keep your stops in place. Again, we're not going to love any trade we put on, especially because of the added volatility. All right, give me a chance here to get out of some here. Got down to 87 and 75 there. You almost have to expand your stops a little bit to take into consideration the added volatility. All right, gave you a chance there to get out of some, scratch it if you didn't like the trade. Obviously, it went there very fast. Have to make sure you trade stay focused, even though it's trading quickly. Yeah, below 80, we've got 70. 59, 47, and 39. So below 80, we've got 70, 59, 47, and 39. We always have levels there, Michael, always.
So could you repeat those below?
What's that?
We repeat those below, please?
Sure. 70, 59, 47, and 39. I haven't seen a bar like this in a long time, so we have to always stay focused and understand when the volatility increases. You have to expand your stops a little bit to take that into consideration, and also give you a chance to stay into the trade and also make a decision what you want to do with the trade once you have a chance either to scratch it because of the added volatility. And just the one way the market goes. So I wish it was like constant, but there's always going to be different waves of volatility, especially when we start down ticking here. We have a complete rotation there from the highs down here to the lows. Okay, next support level we're looking at is down there at the 80 area. All right, continue it out. Looking at the 80 area next. Get down to 83 half there. And so be a little bit careful there at 82. We got down 93 and change here, especially with the added volatility. If anybody has any questions, feel free to ask in the chat. I don't mind questions, obviously. All right, come back down here now to, again, 80 areas our next support level, but like I said, be careful there at 81. Okay, put down, taking down here to 80 area now. All right, nice rotation there against the 80 area. Yeah, you got a lot. Yeah, I like the volatility. Also, make sure you get out of the trade when they don't work, and that way you keep yourself in the game. And nice rotation here against the 80, and you can definitely take a little bit more than 4 or 5 points. We talked about expanding your stops, but also have to expand your profit targets, and that's also working out for us. You have to do both there, but again, it's a matter of staying focused and understanding what the market's doing, and try to take advantage of it when it rotates down there. It gives us that opportunity. All right, nice rotation there against the 80 area there. Took just a midget of heat. And you're getting a nice little pop back up here. And so again, if you expand your stops, you're also getting the expansion of profit targets as well. And that's working out very nicely. So nice rotation there against the 80. Definitely some pressure here in the market. The next support level we're looking at is down here at 70. You can see the green band and our hourly coming in there at 74. You're very, very aggressive. Bonds and this whole move here in the S&Ps didn't not reacting whatsoever. Just kind of holding steady. Again, if there is a talk about what's going on in the market, is that the numbers are bad enough not to indicate a recession, but if the market switches that concept and these numbers start indicating that negative job growth, which again, if they did make corrections to the last couple months, and they did come in with a negative number for those adjustments. So they're definitely Dow's market is exceptionally weak here. And again, the fact that the Fed definitely late to the ballpark here. I mean, they knew these numbers last month, so it's kind of weird that they were not reacting to it. So, just to give you an example here, in the tens, the 10-year yield is trading at 4.08. And remember how we had the inversion of the yield curve, but we don't have that anymore. The 2 year is trading at 3.48. So I think they definitely are leaning towards a rate cut. So poach jobs, the yield curve has steepened. Oil prices are lower, all consistent with historical patterns and corrections, less in line with past experience and indicative of a broader structural shift. Gold prices continue to march higher. So gold is definitely the story here. They're not, and they're definitely indicating a little bit of a problem more than anything else. There's only one metrics here that's indicating something. So crude is down 2%. Of course, there's not going to be any change in gas prices in Illinois because they're still at 375, 380. Don't understand that whatsoever. I have no idea what the hell's going on in Illinois. prices have not changed whatsoever. My friend, where was he? He told me he was, no, he was in Arizona. He goes, the prices there are like 30, 40 cents cheaper. Everywhere but Illinois. Illinois, it's all messed up here. I don't put that. A lot of things that are messed up in Illinois, and that's definitely one of them that's pissing me off. All right, gonna hang in here. See our blue band, like green band, and our hourly coming in there at 74. For those of you who are very aggressive, otherwise we're looking at the 70 area next. You can see there in the chat. There are the additional levels that we gave out this morning. Again, you can use those as a guide to the day for the whole day. All right, nice to get some trade here Friday, and also nice to get some trade that actually is working nicely for us on a Friday. Nothing like making a little bit of money on a Friday, make the weekend go good. Worst thing ever, and I've been there, to lose money on a Friday and then have to stew about it all weekend. And stew is the proper terminology there because I hated losing money on Fridays. It was the worst. And I did stew. It was not a good stew. It pissed me off. But hopefully we don't have to stew today. Again, if you made enough money this morning, again, happy. You don't have to keep trading. Oh, it's misnomer here. Oh, I got to keep trading. Markets are open. Okay. All right, coming down here now to 74. For those of you who love 74, you know I love 74. But only if you're very aggressive. Otherwise, you're looking at 70 area. Yeah, you got a quick couple points there against 74 if you're very aggressive. All right. Get down to 72. Oh, get down right there, 74, and give it. You gotta love 74. I mean, I hate to say that. I mean, the other day it didn't work out for us. Kind of ran through, but 74 is just boom. Ask me why it works. No idea. For me to give you like a reason why 74 works, besides the fact that it's 74, no idea why it works, but it does. Okay, we're looking at 70 now. Next little level that we're looking at, 70 area. Love the volatility, right? Just keep your stops in place because we are not going to be perfect and we're going to get run over in one of these areas. You don't want to get run over. You just want to keep your stop in place and just give us a little opportunity. And if it does, great. If it doesn't, that's fine. Get out and look for the next trade. And if you made money this morning, you're happy and you're good to go. That's it. You don't have to do anything else. All right, we got down this 2.25 here. And again, welcome some new folks that are here. We're trading many S&Ps. We're looking to scalp the market based on the levels that we gave out this morning and additional levels that we have as well. We just never know when we're going to get volatility in the market, but we've been doing well with the levels that we've given out. And if anybody has any questions, feel free to ask in the chat. We are scalping these markets. We're looking to take advantage of ebbs and flows, and not so much trying to hit home runs. It's not what we're trying to do here. Obviously, if I knew the market was going to tank from these highs, I would have told you just to stay short at some point. But I didn't know. They didn't tell me. All right, coming down here to the 70 area now. Okay. We got filled there at 71 there, and quick little pop back up. Again, just peel it off, take the profits, especially if you're up. Keep your stop in place. Again, I like to scale in or out, so I'm 71 to 70, even into 69. So got filled there at 71, had a nice little rotation here. And then take your profit and see if we can make a little bit more out of this, and or take down to 70. See what happens, especially if we're done different bars, so be careful here. Maybe look at 69 instead. The bar just closed, so the 70 is a little bit more tenuous, especially with this kind of volatility. So this is from Zero Hedge. See, this is by far the ugliest jobs report we've seen relative to expectations since COVID. Every aspect of the report was dismal. It serves two purposes. Kitchen sink, the uglier the numbers, especially with next week's revisions on deck, and cements a 25 rate cut and puts 50 in play. And especially with the rotation here, the downside, definitely the market players are not happy after initially rotating it up there a little bit. Like I said, be careful there at 70 because of the rotation down here to 70, 75. I would say maybe trade a 69 area to give us a quick scalp because of the lower end of the 70. And if you did jump in there at 69, you're getting paid off here. All right, nice little rotation there. If you kept the 70, you did okay there too. So either way. But if you made a little bit of an adjustment, you took no heat whatsoever on the 69. Okay, nice little trade there too. Again, all we're trying to do is take advantage of the ebbs and flows against our levels. Next level we're looking at here is the 59 area. Who would have thunk it? Okay. We're going to go from these highs to the lows, but hey, giving us nice opportunities. All right, next area we're focusing on is going to be the 59. All right, continue to now take looking at the 59 area next. If anybody has any questions, feel free to ask in the chat.
Hey, quick shout and welcome to Ed B. Hey, Ed, welcome. Hey, Ed, I sent you out a quick write-up about what we do here and the opportunity. Let me know if you got it. James C., let me know what you're doing. You're on the exit list. So let me know if you want to stick around. Use the chat feature to respond.
All right. Well, the next core level we're looking at is down here at the 59. We've had a nice trading day, I think. Hopefully, some of you do okay. Yeah, we continue to have a little bit of pressure here in the market. We're looking at the 59 area next. All right, got there to 60 and a half here. What? All right, well, we got down to 16 and a half. Like I said, I scale in around there. If you did expand your scaling in because of volatility, maybe you got in there at 61. Just kind of being a little cautious here, and to the point where probably not wanting to trade. So just be careful here. And 60, 59, I got down here to 60 and a half. Again, we're coming here to the end of our morning session. So if anybody has any questions, feel free to ask in the chat. We've had a pretty decent morning, I think, if you traded with us and traded our levels as we rotated to the downside here, and we're able to take advantage of those ebbs and flows that the market gave us. Again, if anybody has any questions, feel free to ask in the chat, but hopefully you did okay. And we're going to head out here a little bit early. The market rotates back up here. Again, be careful there at the 59. I hope everybody has a good weekend. We gave you the levels here. We got 59 next. Let's see here. Could give you a couple more levels here. If you're below 59, 39 on the downside. We got 28, 20, 12, and then 6403. If you are so inclined to be trading, and if we completely fall out of bed, some more. So we have 39, and then below that we've got 28, 20, 12, and then 6403. There are some more levels there for you in the chat. All right. I don't know. Big day. Hopefully it did okay. Right now we got resistance around the even to 03 area. Up on top, 6503, the even area. If we get back up, right now that's the only thing I would do, and it can really easily rotate back up there a little bit. Obviously, there's some other resistance areas, but at this point, if you did okay, hopefully you did all right. So, if anybody has any questions, feel free to ask in the chat. Otherwise, we'll get back here in a bit.
Thanks, Soph.
All right. Have a good weekend.
You too. Have a good weekend, everybody. I'm going to sign off as well.
Hey, quick shout out to Ed B. Are you back, Ed B? James C. Let me know if you're still there, James C. Ed B. Use the chat feature. If you want to use your mic, you can. For those that are joining us through our socials, join us live daily. Follow these instructions at the bottom of the charts.